Bismillahirrahmanirrahim. Assalamu alaikum. I am Syed Akif Shah, lecturer finance at Institute of Business Studies, Kohat University of Science and Technology. The title of this course is Intermediate Accounting, and the course code for this subject is BS 363. This is our lecture number 14, and the topic we have started is accounting treatment for debentures. Basically, this lecture is in continuity to our previous two lectures. So I suggest you to go through from lecture number 12 and 13 before listening to this lecture. The outline of this lecture comprises of the entries for debenture issuance, under which we have already discussed from the consideration point of view the first 2-point agenda, which were for consideration other than cash and for consideration in cash. In today's lecture, in this lecture number 14, we will particularly focus on the debenture issuance as a collateral security to the bank or any depository institution from which we are actually obtaining the loan as a debt instrument, and in return to that the company is looking to issue the debentures as collateral security to that depository institution. And at the end of this lecture, we will discuss the one numerical example which will cover all the above three phenomena in one go. That is, for cash consideration other than cash consideration, we will discuss an accounting entry, and we will also discuss for consideration in cash, and finally as a collateral entry. Debenture as a collateral security. Let's say the company is going to loan out an amount from a particular banking organization, and in return to that bank or depository organization, depository institution, the company is offering a collateral security which is going to be the debentures in order to give a surety to the bank that the company will return the amount it is going to loan out from the depository institution. So the example says that, let me select the pen. A limited company obtains a loan from its bankers. Company is going to loan out certain amount from a banking organization of rupees 30,000 and giving the debentures of 40,000 as collateral securities. It is very normal that whenever a person enters into the bank for sanctioning a particular loan amount or putting an application for a loan amount to be sanctioned to him for whatever cause, like house building loan or car financing, or whatever kind of loan he or she is looking to obtain from the bank organization, the bank usually asks for a collateral, a pledge, or to pledge his house or any other tangible asset as a collateral security. So it is very normal that this bank has asked a limited company to give us the debentures of rupees 40,000 as collateral security, which is to express that if the A limited company has defaulted on its obligation to pay out 30,000 rupees to the bank, then these debentures will be sold out by the bank to any investor who is going to purchase this debenture. And in order to keep certain amount as a cushion or safeguard, the bank has asked to keep 40,000 rupees of debenture as collateral security for 30,000 of cash loan amount. So under this scenario, the rules of accounting ask us to make either no entry for debenture as a collateral security, or if the company would like to record such kind of transaction, then the company can simply give a note into the balance sheet that it has collateralized certain amount of debentures for a bank loan. So the case will look like as mentioned in front of you, it is a partial balance sheet, and the company has taken a bank loan, and bank loan is usually a notes payable or it could be account payable, but in this case the bank loan is actually the notes payable, and notes payable is the liability of the company. This balance sheet belongs to the A Limited company. So under the liability section, the company has mentioned a bank loan, and in the bracket it has clearly mentioned or given a note that a collaterally secured by an issue of rupees 40,000 debentures. So everybody now knows that company has issued 40,000 of debentures. If the company defaulted or failed to pay out the loan amount, which is rupees 30,000, the company will confiscate these 40,000 rupees of debenture and will recover, the bank will recover its loan amount, which is 30,000, and any balance excess to 30,000 shall be returned to the company. And if the amount exactly meet these 30,000 rupees of loan, then nothing will be given to the company after, because the difference of the realized amount of the debenture minus the loan amount will net out to zero. So there shall nothing be left with the bank to be returned to the company's balance sheet as cash deposit. So there are, the rule says either to make no entry and simply give a slide notes into the balance sheet of the company, or in other way around, if you would like, the company would like to make an accounting entry for this transaction, so the transaction may be recorded in the books of company by means of the following entry. The entry will look like debenture suspense account, which will be mentioned in the balance sheet later on. I'll discuss it later on. Debenture suspense account will be debited by 30,000 in our prevailing example, and to the debenture account, which is a liability of the company, will be credited by, not 30,000, sorry, the debenture issued to the bank was 40,000. So therefore the company is required to pay out, sorry, the company is required to record this entry, if it would like to record, by 40,000 rupees, because the debenture issued were 40,000 of worth. So this will be the final entry, debenture suspense account debited by 40,000, and debenture account, which is the company's liability, will be credited because increase in liabilities are usually recorded by credit. Taking these details into the above examples, the item will appear as follows in the balance sheet. So the company's latest and updated revised balance sheet will look like this one. The left hand side, according to the Pakistani and Indian book, says to write the liabilities at the left hand side and assets on the right hand side. So we have done the same. The company has obtained a bank loan, which was a notes payable or a liability of the company. So therefore they have clearly mentioned 30,000 under the liabilities, and at the right hand side the bank balance of the company. All registered companies usually have a bank account. So this bank account was actually credited by the bank, but however this balance sheet belongs to A Limited company, and according to the rule, the A Limited company's cash has been increased because it has taken a 30,000 loan. So the increase in cash was actually deposited into the bank account of A Limited company, similarly as we do have normally bank accounts. So in the same fashion, companies also have a bank account. So this loan amount was actually deposited into the bank account, and this balance sheet belongs to the company's record, not in the company accounts which is existing in the bank. So the company is actually recording that our cash has been increased, and rather than to mention cash balance, they have mentioned it like the bank balance, which is 30,000 increase. So therefore this is our asset, and increase in asset has been recorded by debit, Also, our asset has been clearly mentioned under the title of asset in the balance sheet. Finally, a liability has been mentioned. Another liability is because the company has recorded this additional entry. So the debenture, which is our liability, company has issued 40,000 rupees of worth debentures to the bank as a collateral security. So therefore they have clearly mentioned in the liability section that our liability of 40,000 is due to the bank. If the company is unable to pay out this liability, the bank will just sell out or confiscate these debentures and will recover its 30,000 of loan amount plus the interest due on this loan amount. And similarly, we have just plugged the values of this above entry into the balance sheet in credit side, and the debenture suspense account, which is an asset of the company, should be recorded at the asset side of the account, which is 40,000. And as this account is in the suspense that either the company is going to lose this amount or will just write it off by itself if they fulfill their loan obligation in due course of time. This was all about how the debentures are issued as a collateral security if the company is looking to obtain a bank loan. So the rule says either to make an accounting entry just like this one, or simply you can just give a note into the balance sheet and do not make any entry. So both options are correct, whatever you would like to do so. Now let us discuss illustration 4.3 from our recommended book, which will cover all our three main issues we have started. That is, it will cover the consideration other than cash, and entry regarding the consideration in cash when the debenture will be issued, and finally what to do if debentures has been issued as collateralized security. So the illustration says A Limited Company made the following issues of debentures. First case says it has issued 1000 debentures at rupees 100 par value, which is usually par value, at rupees 100 per debenture for cash. So company has, under first case, company has issued 1000 debenture at the rate of rupees 100 per debenture for cash. Second condition or second case. Let's discuss first case and then to read out the second one and make the entries. So how could we journalize the first case, which is issued 1000 debenture at rupees 100 per debenture for cash? So the entry will be company's bank account will be debited because the investor has actually deposited 1 lakh rupees into the company's bank account and has obtained debentures or purchased the company's debentures in order to earn the interest over it. So the debenture account, which is the company's liability account, shall be credited because increase in liabilities are recorded by credit, and the cash available in the bank, which is actually this bank account, can be transformed into the cash account of the company. So cash has been increased in the company's bank account, so therefore it has been debited, and the company's liability has been generated, which is 1 lakh rupees in the future. And the smallest narration explains being the issue of 1000 debentures at the rate of 100 each. So we have journalized the first entry, which is debenture issuance in cash or upon cash. The second case says to a creditor, this A Limited Company is going to issue to a creditor who supplied machinery to this A Limited Company. The machinery cost was 1 lakh rupees, and the company has issued them 1100 debentures of 100 each. The price of the debenture is rupees 100 and the company has issued to this vendor 1100 debenture. So this case is clearly the debenture issuance as a debenture issuance in consideration other than cash amount. So the cash is not involved in this case. So what to do, as we have already explained that the sundry asset account will be credited and the vendor account shall be credited, and in the subsequent entry the vendor account, which was the temporary account, it will be debited with the same amount, and the final debenture, which is the liability account, shall be credited. However, we can merge these two entries and can make a simple one entry as a overall depiction. So the vendor account, which was the previously initiated or has been recorded as a temporary account, will be debited in order to remove a right of this account, and the sundry asset account was debited and vendor account was credited in our first entry, and in the second entry the vendor account was debited and the discount on issue of debentures will be debited, since discount is a kind of expense and expense are usually recorded by debit because we need to write off it from the books of account or the balance sheet, and then from the income statement under expenses we are supposed to write it off. So therefore it is a kind of expense, and increase in expense are usually recorded by debit, and the debenture account will be 1,10,000 rupees. How does it calculate, or how to calculate this amount? We have actually issued the vendor 1100 debentures at the rate of 100 each. So simply you can multiply these two debentures with per debenture value, and the resultant liability of the company will be 1,10,000 rupees. It means that the machinery was actually costing 1 lakh rupees. However, the company has issued to the vendor 1,10,000 rupees worth of debentures. So it means that the company has actually issued its debenture on discount. If it would have issued them on par, so the company would have been required to issue only 1,000 debentures to the vendor. But as the question says that company has issued 1,100 debentures to this vendor, so it clearly explains that company has issued its debenture on discount rather than on par value. The shortest narration explains, being the issue of 1,100 debentures of rupees 100 each to discharge the purchase consideration. Now let's discuss the final condition, final case, which is collateralized debenture issuance as collateral security. The statement says, to bank for a loan of 7 lakh rupees as a collateral security, this A Limited company is going to take a loan from a bank which is 7 lakh rupees and is going to issue 10,000 debentures as a collateralized security of rupees 100 each. So after multiplication of these 10,000 debenture with 100, it will give us 1 million rupees worth of debenture has been issued to the bank in order to obtain 7 lakh rupees of loan. So the difference between debenture amount and the loan amount is due to the fact that bank usually keeps a certain extra amount as a cushion in order to cover its loan amount which it has sanctioned to the company, and the bank usually wants to keep its loan amount well secured and to minimize the risk of default by the company, and as well as the price devaluation or in the prices of debentures. Like it is quite possible that the debenture prices may fall in the future and the resultant loan amount may not recover from these debentures. So in order to just cover up this risk factor, the bank usually asks for the larger portion of debenture issuance for 7 lakh rupees of loan. In this case, for the 7 lakh rupees of loan, the bank has asked to issue 10 lakh rupees of debentures. Since this debenture has been issued as a collateralized security, so either we need not to make any entry, either no entry and simply note in the balance sheet, as we have previously mentioned in our this case, a simple note in the balance sheet, and there could be no entry, accounting entry. However, in the second case, we can also make an entry, accounting entry, and then subsequently reflect it in our balance sheet. So either in this case we can simply omit the entries, but in other way around, if we would like to journalize the case, we can simply debit the debenture suspense account by 1 million rupees and to the debenture account, which is the liability of the company, as 1 lakh rupees, and then a shortest narration, debentures issued as collateral securities. We have not actually reflected this entry into the balance sheet because the question did not ask us to reflect the impact of this debenture suspense account and debenture account into the balance sheet of the company. So this was all about how to record the debenture issuance under 3 different cases. Thank you very much for listening to this lecture. If you have any question, feel free to ask on my registered email, or you can simply post them on KCMS and I'll be happy to answer your question. Good luck for the day. Allah Hafiz.